I've been receiving a lot of questions about life insurance, so we're gonna talk about that today. Hi everyone, I'm PPE and this is the Peso Pro episodes where we talk about money management tips and peso tricks. It has come to a point where I actually figured that we haven't talked about life insurance at all. It's an important piece in the financial independence and financial management journey for any individual. But why is it always such a sticky topic, and why do we have different thoughts and points of view about insurance in the Philippines? In this video, we're gonna talk about life insurance in its simplest form, meaning only coverage in case the insured dies or passes away through an accident or natural causes of death. This means na hindi muna natin pag-uusapan yung mga ibang riders that you typically hear of, like critical illness, their hospitalization benefits. We'll probably cover that in another video. If you want to talk about that, feel free to comment that down in the comment section below. Today, I want to tackle one of the basic things in thinking about, is it the right time or is it actually the right move for you to get life insurance for yourself? Here are a few considerations that I suggest you take a look into before diving right in and buying a policy from a friend who's selling to you, or buying multiple policies because multiple friends are selling to you. Life insurance can be a great tool for an individual. It actually solves a lot of issues that you may encounter in your life. A lot of these cases, these issues are unforeseen or cannot be predicted. That's why some people actually think of insurance as an expense that they're really paying for just an in-case of scenario. Meaning, hindi talaga natin alam kung kailan natin siya kakailanganin, but as experts say, if you put off buying insurance for too long, then you may actually end up in a place where wala nang mag-i-insure sa'yo dahil nangyari na yung thing na hindi natin ma-predict. I hear of stories from a lot of friends who were able to sit through a presentation, hearing through what a life insurance is, and are often left dumbfounded whether they really need it or not. So here are a few things that you need to think about before getting a life insurance policy. Number one tip is think about your emergency fund. Remember, in the 8 Pro Steps Towards Financial Independence, we talk about emergency funds twice. If you haven't seen that video, I'll link to that here. Because emergency funds are meant to actually protect you in an immediate case of emergency. And so setting that up first and foremost is going to be very, very important for two reasons. Number one, if you cannot afford an emergency case, then there is a risk that when that emergency happens, you'll actually miss on payments for your life insurance policy. And in a lot of cases, that would mean that your insurance policy will lapse. Meaning, pag hindi ka nakabayad, mawawala yung lahat ng protection of that life insurance policy, which then sort of negates the purpose of getting one in the first place. The second one is, in a lot of cases, your life insurance covers you only for the super extreme case of the insured passing away. Meaning, sometimes if you just get hospitalized or you get very sick, if you don't have the right riders for that specific scenario, your life insurance policy may not even pay you anything at all. Remember, life insurance policies cover very specific scenarios because obviously, the insurance company can't just cover you for almost everything and anything under the sun. And in cases of what we've seen in the past few months, for example, let's say you lose your job, for example, a life insurance policy won't be able to protect you from that, but your emergency fund will. So step number one is to set up your emergency fund to make sure that you have that cushion for life's unexpected things in the immediate term. Second would be to assess your cash flow and your personal finance management today. This is very important because a life insurance policy is typically a long-term investment and a long-term commitment. which means na pag hindi mo pa naayos yung base and you don't even understand where your money goes, it's very, very hard to commit to something long-term. So keep in mind that before you jump and say, 3,000 per month lang naman yan, or kaya ko naman yung quarterly payments because of so and so, before you get into that state, think about how managed your personal finances are before jumping into a new long-term relationship with your insurance policy. Since we're talking only about life insurance, meaning yung death benefit lang, that if you pass away, somebody that is designated to be the beneficiary of your policy will get an amount of money. Which means the third tip is very important, which is understanding if you have any dependence on your livelihood. For example, if you are the head of a family, or if you have kids, or if you have people depending on you for your income, let's say aging parents or relatives who are dependent on your income, it's probably wise to get a life insurance policy, because if you pass away, then that income technically also goes away. The amount of life insurance that you get can help that family or that beneficiary tide over the next few months or years depending on the amount that you got, para makatawid sila and have a safe cushion without your income in the picture. Remember, ang pinaka-importante na use of life insurance is that it replaces the income you earn today for your dependents when you pass away. The other big purpose to consider when you think about life insurance is thinking about the estate that you will leave behind. So in a lot of cases, you will probably, over the course of your life, amass good enough assets. And these assets, when you pass away, for them to be able to transfer that asset from your name to your heirs, there is an estate tax component. And so life insurance can be a great way to plan for that expense as well. If you don't have dependents today, think about it if you really need life insurance. In a lot of cases, you probably won't. And it's probably better to put your money into an investment account rather than getting insurance right now. Also, consider though that when you're younger, insurance premiums tend to be a bit cheaper. So just weigh that pros and cons. After you've assessed if you have dependents or if you need to plan for your estate, then you would probably have a better answer on this fourth tip, which is knowing what you really need. In a lot of cases, friends actually don't need life insurance for various reasons. Either they're single and nobody's really dependent on their income yet, or they actually have other benefits from their work, for example, that provides a good enough cushion in the form of a life insurance. However, a lot of people actually need life insurance in another form. It can be support for critical illness, hospitalization benefits, or other similar kinds of things, which then is a totally different scenario. This is helpful because once you understand what you need, then talking to your financial advisor or the insurance agent will be a better conversation to have. Instead of you getting a package deal of whatsoever being offered to you, you will be able to ask specific questions kung ano ba talaga yung kailangan mo. So for example, if you are scared that you probably will get seriously ill because you've seen that from a friend's family, or if you've heard about horror stories of medical bills later on in somebody's life that they paid several millions because of a sickness, then maybe getting a life insurance policy with a critical illness rider is the right choice for you. Remember, right now, we're only talking about life insurance, meaning only the death benefit. But if you understand what you need, then there are probably better policies that are suited for your need, instead of just getting a life insurance policy that's only the death benefit in there and nothing as a top-up rider that actually was the one that you really, really needed. I know of a friend who I think is in the same shoes of a lot of people who at the start of their career, somebody went to them and sold them a policy and never really understood what she was buying. And so this friend bought a policy thinking that, okay, I bought an insurance with investment, or what's commonly called a VUL, without really knowing what's inside the VUL. Several years later, after paying diligently every quarter, she saw that, okay, some of her investments actually grew, which was in line with what the financial advisor said. But at the back of her mind, she was thinking that, oh, okay, I will probably have hospitalization benefits or critical illness riders, only to find out that there was really no rider attached to it. It was only a death benefit, so she actually wasn't protected for some of the things that she thought she had. So it's very important for you to know what you need to be covered for, because insurance, again, typically insures you for a very, very specific scenario. And if that scenario wasn't covered into your policy, then sometimes you actually not get the benefit that you're looking for. The next step is knowing what you already have. And in a lot of cases, people forget that they actually have some form of life insurance somewhere. The most common things that people tend to forget would be life insurance offered by your employer. In most companies, this would come in the form of a multiplier of your current gross income. So for example, if you earn 50,000 pesos a month, in a lot of cases, this is probably a 12, 24, or 36-month multiplier. So what you would get is probably if you have 50,000, you have a 24-month multiplier. That would mean that 50 times 24 is 1.2 million. At the event that you die while you are still employed, for whatever reason, because you're part of the group policy of your employer, the beneficiaries on record of your account will actually receive that 1.2 million without you paying anything, because it comes as a company benefit. In some companies, this is very big because it can go to as high as 36 or maybe even higher than that for some companies. But let's say you have 36 months multiplier, and if your income over the years has grown to, for example, say 200,000, then 200,000 times 36 months is actually 7.2 million, which is very big as a coverage for your life. Considering what you already have is going to be very important, because what you don't want is for you to overpay on insurance as well. Remember, insurance almost always comes with a cost, except maybe for some few freebies here and there. Overall, life insurance is a great tool to prepare for life's unexpected challenges and scenarios. Obviously, nobody knows when they're gonna die, or even for riders covering certain benefits, nobody knows when they're gonna be diagnosed with a severe critical illness or get hit by a car in an accident. All of these things are unexpected, and that's why getting insured for the right things, for the right amount, is going to be very, very critical in your journey. As a bonus tip, talk to a financial advisor from any of the reputable companies and talk to them about very, very specific needs and ask them how this policy addresses that need. I want you to challenge your personal financial advisor or the insurance agent that you are in talks with to thoroughly explain to you what are the scenarios that are covered and what are not. In some cases, ask even for a copy of the policy so that you really, really know what you're getting yourself into. Insurance agents or financial advisors typically earn their income based on a commission from the premiums that you pay. There's nothing wrong with this. It's a way for them to earn their living, and as long as they give you the right due diligence and service, I think it's also money well spent. What I urge you to do is talk to a financial advisor who has the heart of a teacher or a mentor and not that of a salesman. And I guess by now, you should know how the two differ from each other. If you feel like it's a product that's being shoved down your throat, that you have to buy it now, by all means say no. And I'm telling this right now because every time somebody forces you to buy an insurance product, it's probably because they just want to hit a sales quota or get the commission from that sale. Always remember that your financial advisor must have your best interests at heart. By all means, ask a lot of questions because they undergo training, they go through rigid exams with the insurance commission, all to prepare for the best possible service to you. If you are unsatisfied with the answers that you get, then by all means do your own research and maybe read the policies that you have on hand, or you can request one from that financial agent. Here are some last few tips when you buy an insurance that personally has helped me assess if I make the right decision or if I'm in the right mindset. Number one, think about life insurance as something you put in as a protection for life's uncertainties. And they are uncertainties for a reason because no one can really tell when they're about to happen or if they ever will. But I guess when those things happen, you'd probably thank your younger self for making that decision and making an informed one such that the benefits really go down to the persons you love. Second, when thinking about getting a life insurance policy, also consider your cash flow and your personal finance management. Find the best payment method and frequency that matches your money management scenario. For example, if you expect to pay for this every month, then make sure that you carve out this amount as part of your expenses month in, month out, so that you know how much to pay, when to pay, and not ever miss a single month in the long term. If you're thinking about it like me, where you set aside a bonus or a vacation leave encashment to pay for your life insurance for the year, then maybe an annual plan that has been timed about the same time when you get this bonus or encashment would probably be a good deal. In some cases, you also get a discount when you pay for your life insurance on an annual basis. Also takes the headache of thinking about it every month, but that's just me. Lastly, when you pay for your life insurance premiums, a lot of the insurance companies do take credit cards as payment. And this is probably something I wish I did much earlier because your life insurance premiums can actually be quite expensive. So pay for it using your credit card so that you also earn points from the transaction as an added bonus. Lastly, maximize your insurance company's perks and programs because occasionally they will run a program where if you do a certain task, they will give you some rebates or some credits to buy maybe a meal or a coffee or a few rebates that you can use against your payments eventually. So take advantage of those and be in the know. I hope this was helpful if you're considering and getting life insurance. If you have questions, feel free to comment them down in the comment section below. We'll try to cover more insurance topics and even bring friends over to the channel so that we can ask them specific questions if you want that, and if you have other specific topics that you want us to cover, I'll be glad to hear about it. If you need referrals for good financial advisors, hit me up on hello@thepesopro.com so that I can help you personally. That's it for today. I talk about other tips on investing and I'm gonna link those in the videos right here. And if you haven't done so yet, click subscribe, like, and the notification bell so that you're notified when new videos are out.